we'll just say in summary, accounting is just going to be these three reports. Let's look at the income statement. What is it? It looks at your revenues, your expenses, and your net profit. So we calculate our net profit by revenue earned less expenses incurred. So let's say, for example, we had all these transactions for a business this month. We've got sales of 30 grand, wages of 10,500, rent of 8, advertising of 1,000, and a phone bill of 500. So we say the revenue earned would be the sales, the expenses incurred would be the wages and the rent, the advertising, and the phone bill. So we've got $30,000 of revenue earned, $20,000 of expenses incurred. That gives us a net profit of $10,000. So pretty simple. Isn't it just that the revenue earned, isn't that just the money I get though? Couldn't anyone do this? Why would I need to do accounting to understand that? That seems so easy. It's actually incorrect. These are really different things. Let's say we've got 3 furniture store businesses with the following transactions. Business A sells a couch today for $5,000 and gets the money from the customer. So that is a revenue earned and they've received the cash. That's real simple. What if I'm running a business like Harvey Norman where I sell the couch today but it's on credit? I've given the customer 24 months to pay. I've actually got revenue earned but I haven't received any money, so we've got a difference now. And this is just one transaction. What if we've got 1,000 transactions? Which business would I rather be? I'd rather be business A. They've not only earned the revenue but they've got the money. What if I'm business C? They go and borrow $5,000 from the bank today. Is that a revenue? It's not. Is that cash received? It is. So now we've got another difference. Just because I get money doesn't mean it's revenue. I've got $5,000 but it's from the bank. That's not a revenue. So clearly we need a little bit more of an understanding. Expenses incurred, isn't that just the cash that I pay? That's actually again wrong. I need a background in accounting to understand this. Business A received a $100 phone bill and they have paid it. So they've got an expense incurred and they've paid $100. Business B got their phone bill and they've decided to pay it next month. So they've got an expense incurred and their cash paid is actually $0. So we have a difference. What about business C? Business C has decided to pay back $100 off the loan that they owe to the bank. That is not an expense, but it is cash paid. So 3 pretty basic transactions, but you can see the difference between expenses and cash is quite different. So we need a little bit more of a background to understand that. So given that there's a big difference between net profit and cash, I think the biggest question we want to ask is, well, what do I pay the bills with? If I have a big net profit, does that mean I'm successful? Well, it actually doesn't. Let's look at a business called Enron, one of the biggest companies in the world by the year 2000. Here's their net profit leading up in the years to 2000. So you can see there's a big net profit of $979 million for the year 2000. Now, what was the profit for 2001? I can't give it to you because they actually went bankrupt. They don't exist anymore, and it all happened before the next year, 2001. How does that happen? How can I make a big net profit but go broke? Well, it's all because there's a difference between profit and cash. So what I need is the income statement's good, but I'd like to have another report that's going to tell me